Welcome. Today, I'm going to take up a very interesting topic, and which is a new one because our Indian government has introduced digital rupee concept. So, what are the highlights of that digital rupee concept? Have everything we are going to see today, and this presentation is based on the RBI's instruction that they have published in the concept of CBDC, Central Bank Digital Currency. So with this small introduction, I want to start. This is only a beginning in India, and this is going to be the hot topic of today because this is going to change the entire financial scenario of our country. Even it has got very big help in boosting the economy. And before going to the presentation, we must understand the very important terms that the government has used in this digital rupee. One is CBDC, that is Central Bank Digital Currency. Central Bank Digital Currency, and RTGS, you know it, it is real-time gross settlement, and NEFT, National Electronic Fund Transfer, and IMPS, Immediate Payment Service. Whenever you make the payment, this IMPS is used, so immediately the fund is being transferred, useful for instant payment, and UPI, that is Unified Payment Interface. This is also used for instant payment by the customers. BPPS, that is Bharat Bill Payment System, electronic, that is this is used in electronic toll system. So this is a very important thing that you must understand this, because when you look into this, the term is towards the payment. It is not receipt. Though you are making payment, everything is now it's being used in the money, physical currency, either in cash or through bank. Now, it is a digital currency, which everyone said that it is equivalent to cryptocurrency. We will see whether it's a cryptocurrency or not. This is a very important thing that I want to clear everybody's mind. And here, this project, this is a pilot project launched in India through RBI. This is launched in India with effect from 1/12/22. And initially, the government has launched this concept at 4 banks, that is State Bank of India, ICICI, Yes Bank, and IDFC First Bank. And where the branches located are covered by this. This is Mumbai, New Delhi, Bangalore, and Bhubaneswar. This is only an initial phase because the government, they want to test the project. So they launched at 4 banks at 4 places. And slowly it may extend to other places soon, but everything will be set. And what will be launched on December 1 is the first phase of the pilot project that will cover the select locations and banks in a closed user group, CUG, and comprising participating of customers and merchants. This is what RBI said. So customers and merchants, they pull together, and this scheme is being launched at the 4 places. Now, before going to that, how many countries introduced CBDC, Central Bank Digital Currency? At present, in more than 100 countries, the concept of CBDC is there, which includes 19 of G20 nations also. Now, in India, the concept of CBDC is introduced from 1/12/2022. This is for the first time our India has launched the concept of CBDC. What is the difference between cryptocurrency and digital rupee? So this is a basic thing that everybody should know. They thought that it's a cryptocurrency, but it is not. Cryptocurrency, there are no regulators. Somebody is issuing it, somebody is controlling it, but there is no proper regulator in India. And the value of cryptocurrency changes either in the upward trend or in the downward trend. So a lot of people, they started to invest in cryptocurrency, but now they are facing in the cryptocurrency in a downward manner. And there is no control in cryptocurrency management due to decentralized concept, because there is no one person to control the cryptocurrency. A lot of people are there, a lot of cryptocurrencies are there. Everybody is controlling according to their whims and fancies. This is the basic concept of cryptocurrency. Digital rupee, RBI is the regulator. and it is being recognized in India. So in India, only digital rupee is recognized and not cryptocurrency as of now. And the value of the currency will not fluctuate. Suppose if the cryptocurrency, if the digital rupee is used for 100 rupees, it remains there. It will not increase, it will not decrease. So value of the currency will not fluctuate in digital rupee. It's controlled and managed by Reserve Bank of India as well as by the banks. And digital rupee is not a cryptocurrency. This point everybody has to bear in mind. This is not a cryptocurrency. It's just like a money transfer platform which the government has introduced in the form of digital. So this is being regulated by the RBI, and we are working out of digital rupee. So this one is used for the retail dealers. So there are wholesale persons who are using digital rupee. At present, they have introduced for retail. This is a digital token, which is a legal tender, because this is a legal tender introduced by Reserve Bank of India, and it's issued in the same denomination of physical cash currency. So in all denominations, you can get 1 rupee, 2 rupees, 5 rupees, 10 rupees, 50 rupees, 100 rupees, 200 rupees, and 500 rupees and 2000. In all physical currency equivalent value, you will be getting the digital token. It is distributed to the public, distributed to the consumers, to the merchants through the intermediaries. Who are all called as intermediaries? The banks present, they are treated as the intermediaries. Digital rupee, the users to transact through the digital wallet offered by the participating banks and stored in mobile banks and devices, which is set by the RBI. So that's a wallet, and it is there at the participating banks, and you have got you know the balance in your mobile and your laptop or system. Thereby you can do the transaction. This is what the RBI said. There is a transaction you can take place between person to person. You and me, we can do the transaction. The person to the merchant, that is the wholesalers, that is the persons who are selling the goods. For them also, you can use the digital rupee. And payment to merchants can be used through QR code, which is available at the merchant place. Normally, you go to the shop, there is a QR code. There, from there, you can do the digital rupee transaction. And this one is since it's being controlled by RBI, this one is trustworthy, safety, and finality is the main feature of digital rupee. And for this, in CBDC, many countries offering the balance in their wallet, that is, they are offering interest to the balance. But in India, there is no interest concept. Whatever be the balance, no interest will be paid, because if they pay interest in this type of wallet, then this digital rupee concept is a direct competitor to the banks in the form of getting more deposits. So at present, in India, no interest is being paid on the balance as in the case of cash. For cash, nobody is, suppose we are having cash of 2000, no interest is being paid. Just like that, if you are having digital rupee, you will not be paid in any interest. But it is there in some other countries and not in India. And so far we have talked about we have discussed about the digital rupee and what are the important highlights of CBDC, central bank digital currency. What is the RBI role? Because this is very, very important. We should know all the highlights, because based on which everybody is going to do the business. So the management of currency, normally it lies with the RBI. It is a statutory power of the RBI. The power is being given to RBI as per section 22 of the RBI Act of 1934. So RBI is the responsible person for the design, production, and overall management of the nation's currency. RBI is the responsible person to design the currency. And RBI has to ensure that there is adequate supply of clean and genuine notes, because clean notes means there should not be any scribbling and everything. So they have to give the genuine notes. That means it's legal tender notes the RBI has to introduce, because there are some counterfeit notes are also there that will not be recognized. So here RBI is the main person who has to control the management of currency. So in order, say this digital rupee concept is one of the management techniques adopted by the RBI. Now we are going to see the money translation. Initially, there is a system, but this money concept, when you look into the history, it dates back to thousands of years. So when we start the system, it's a barter system. That is exchange of goods. That is the first thing. Then that has been substituted by metal coins and paper money. In order to, so when the government has substituted the metal coins and paper money, slowly the barter system concept has uh, has gone out of the system. Now, these metal coins are made up of bronze, copper, silver, and gold. And these coins are being made payment in the form of count and not in the form of weight. So 5 coins, 10 coins, 20 coins, it is not on the form of kg. So the payment in the form of metal coins or in the form of, even now also we are getting metal coins, say in the form of 1 rupee, 2 rupees, 5 rupees, 10 rupees, 10 rupees, when sometimes 100 rupees also. So slowly physical paper currency is issued by, after that physical paper value currency is being issued by the government and with the value. So the metal coin concept is also being removed by way of issue of physical paper currency. But still in our India, not only in our India, in all countries, we are having the metal coin concept in a small tender, say 1 rupee, 2 rupees, and not for the higher denominations. And the value of currency is stable and the goods price is fluctuating. So the value of the money is stable, but the goods price may fluctuate. So this is the main history of the money. And money has the intrinsic value or title to other. Suppose it's a title. If you are holding 2,000 rupees, then that is your ownership. Even you can pay this as a debt also. So it has got a debt instrument value as well as the money value. The government said the currency issued by Reserve Bank of India is a legal tender. So currency is a form of money and it is being issued by RBI. It's a legal tender. So entire citizen of India, they can use it. And it's a paper currency as well as it's a debt instrument also. So everything is legal because sometimes the government is issuing some bond. So that bond is also can be taken as debt instrument. When the government has given that, they have printed the currency and they put it in the circulation, then it's a liability to the Reserve Bank of India because in the note you can find that one thing, say, I promise to pay the bearer the sum of 500 rupees. It's being signed by the government. So it is a liability of the Reserve Bank of India. But if you are holding this cash, it is your asset. But it's a lab because even in case if there is any failure to accept this, then it's a liability of the Reserve Bank of India to make the payment to the person who is holding the cash. So it is, you have to remember that whatever be the currency issued by Reserve Bank of India is a legal tender and it is the safest form of money to banks, business and public. The primary functions of money. So we have seen this legal tender. Next, we have to see what is the primary functions of money. It is a medium of exchange, unit of account, and store of value. So three main things are the primary functions of your money. All three functions. We have to see what's a medium of exchange. It is used for any transaction wherein goods or services purchased or sold. The one body say that it is a 500 rupees, then 500 rupees you can give. So it is used for any transaction according to the value of the goods and services. For it's a medium of exchange. Now we are going for the unit of account. It is used to value the goods or services and express it in monetary terms. Second, suppose this pencil cost you 10 rupees. The unit of account. So for one article, you have to pay 10 rupees. One is to purchase that you can use it, but the value of a good is being expressed in terms of money. Then there's got a store value. Suppose you can reserve the same thing in a bank, or now it is a digital wallet for any future purpose. I can withdraw the same whenever I require. And it is eligible to get interest to the extent of period deposit. In case of bank, if you deposit say 10 lakhs for 1 year, you'll be getting interest also. It is available for the physical currency. But in India, for digital wallet, at present, the government is not paying any interest for the amount that has been kept in the form of digital currency in the wallet. And what's the progress in innovation of digital payments in India? For this, the government has enacted a separate law. It's a payment and settlement system. It is not a receipt. So one thing, this entire digital rupee concept is towards the payment. So enacted a separate law for payment and settlement system, enabled an orderly and development of the payment in the country, and present stage of the art of system is are affordable, accessible, convenient, efficient, safe, and secure. This is the concept of digital thing. It is, you can afford it, you can pay it, you can easily access it. It's a convenient for you. And it's a pride of the nation, because when you make the payment through digital, not only this concept, even digital rupee, it's a pride of the nation. It is available for 24 into 7 into 365 days in a year. That is almost every minute, every second, this facility is available to the public. So electronics payment system, now it is being changed to, previously you had to change the money through check issue and DD issue. Now it's being changed to RTGS, NEFT, IMPS, UPI, BPPS, and NETC, which lead to the international recognition. The concept of introduction of digital rupee, for me, I want to say that in order to have international trade, this system of introduction will be definitely useful. So in order to have international recognition, this digital rupee concept is being introduced. The rapid acceptance to consumers. Suppose if you are going there and even if you are buying a coffee, the coffee shop also you'll be getting this digital payment. That is GPay or PhonePe something. This is an alternative use of cash and paper making payments. Sometimes you will not be having cash, physical cash. You are having mobile, and you can transfer the money in through GPay also. So rapid acceptance to the consumers. Yes, if you transfer the money, right, I'll accept. Then RBI here, the RBI played the role of catalyst towards achieving its public policy objective of developing and promoting safe, secure, sound, efficient, and interoperable payment system. So this is the main role that RBI plays, because they say that all the transactions should be safe, secure, sound, and efficient. And now slowly we are entering into the CBDC, Central Bank Digital Currency. Due to development in the economy and evolution of the payment system, the forms and functions of the made, slowly we are changing from physical currency to the digital thing. So it has got an influence in the future course of the currency. It's an evaluation from commodity. Previously, it is a commodity, that is barter system, to the metallic currency, to the paper currency. Now it is digital currency. So from commodity to metallic metal thing, and to metal to paper currency, and paper to digital currency. In this way, this concept of currency comes into the picture. This change is a new financial landscape of the economy. This is a very good thing. So because the government has taken bold step to introduce the concept of digital currency, so that digital rupee, so that everybody can have access to it. At present, they have introduced only at 4 cities, only at the 4 banks. With the advent of cutting-edge technologies, digitalization of money is the next milestone in the monetary history. So the RBI felt that the digitalization of money is the next milestone in the monetary history. So it's an advancement in technology. It is due to the development in the new form of money, because they introduced the digital rupee and CBDC, Central Bank Digital Currency. RBI approaches towards the CBDC. RBI to explore the potential benefits and risks of issuing the CBDC to maintain continuum with the current trend in innovation. Because RBI is the is a regulator, they have to analyze the potential benefits to the consumers, potential risks to the consumer while they operate through CBDC. And for some time, RBI is going to explore the pros and cons of introduction of CBDC, because they say that it's only a pilot scheme. This is the first time they are introducing it. They are going to wait what are the pros and cons. Then based on that, they will do a lot of modification in the CBDC concept. RBI is going step by step through various stages of pilots, followed by the final launch. Simultaneously, examining use cases for issuance of its own CBDC, that is digital rupee, with a minimal and no disruption to the finances. Because they introduced the concept of digital rupee, but introduction of digital rupee will not affect the financial system of the country. And CBDC will change the very nature of the money, and it's it will, we can change a lot of things we can expect. Because previously we need only the physical currency. I need only 100 rupees. I don't want even any money transfer. You have to give me cash. You take the goods. Only they have entered into the check transfer. Then after that, they have entered into NEFT and RTGS. Now it is all in the form of GPay and everything. Now it is digital rupee. So the CBDC will definitely change the nature of the money and its bank for international settlement. So the RBI view is that this money can be used for the settlement in the international. So since this is going to be handled in the international settlement, the RBI has laid down foundational principles and core features of CBDC. So to guide exploration and support of public policy objectives as per the RBI, it said that it's a foundation principles. What are the foundation principles? That is, authorities must be confident that the issuance will not affect the monetary or monetary or financial stability of the country. Because by issuing the digital rupee, it should not affect the financial stability of the country. And CBDC could coexist with the existing forms of money, promoting innovation and efficiency. That is, it runs parallel to the existing forms of money. CBDC, that is central bank digital currency, is a parallel thing. It coexists along with the existing forms of money, promoting an innovation and efficiency. What are the key motivations why the RBI has done this? What are the basic key motivations? So CBDC is a legal tender, and it holds the advantage of RBI's legal tender because it's a sovereign currency. This CBDC is a trust one, safety one, liquidity one, settlement, finality, and integrity. This is the first thing, because everybody wants that the currency should be, which they are having, should be safe. Second thing, it reduces the operational cost in physical cash movement. Suppose you are having 20 lakhs, you want to carry that. So you have to pay some freight also. You want to pay physical cash, that also involves cash. You have to maintain the cash in the good old, everything that you have to pay some operational costs. But this CBDC concept reduces the operational costs. It adds efficiency to the settlement system, boosting innovation in cross-border payment space. So the main aim for the country is cross-border payment should be accepted through this CBDC concept. Used to the public without associated risk. So CBDC, you can use, the public can use it, but without any risk, because it has got the same value. So you are holding the currency, I am also holding the currency. You are holding 1,000 rupees worth of digital rupee. I am also holding 1,000 rupees. So we can have the equivalent value. There is no trading is permitted at present because it's a digital rupee. Once again, I say that this digital rupee is not a cryptocurrency. This point you have to bear in mind. And CBDC offers all the benefits in remote locations. Suppose if you are not having LTL power, you are not having mobile network, there also you can use it, this CBDC digital rupee. Now, we are going to discuss about the private virtual currencies, nothing but cryptocurrencies. They are not commodities or clients on commodities, they have no intrinsic value because it's only a coin. You are saying that this is 1 lakh rupee. I can say that this is 10,000 rupees because it has got no intrinsic value. Rapid mushrooming of cryptocurrencies challenges the fundamental nature of the even in India, a lot of cryptocurrencies are there, but most of the people, they invested in cryptocurrencies on the hearsay, but nobody knows where it has come. A lot of people have lost a lot of money in cryptocurrencies. So this disturbs the nation's economy also. So cryptocurrencies disrupt the traditional financial system. Cryptocurrencies are geared to bypass the established and regulatory system so that they play a crucial role in ensuring integrity and stability of monetary and financial ecosystem. And RBI, now they want to control it. RBI is the custodian of monetary policy, and to ensure financial stability highlights the risk involved in the cryptocurrency. The RBI has felt that there are a lot of risks in the cryptocurrencies. Because of the existence of cryptocurrencies, countries' financial stability is being disturbed to some extent. So to control that, the RBI has taken everything into mind. They have introduced the concept digital rupee. So cryptocurrencies undermine the India's financial macroeconomic stability because of their negative consequences in the financial sector. Because since it's not been recognized in India, so the stability is not there. So now the cost of the cryptocurrency, it has come down drastically. A lot of people who have invested in cryptocurrencies are also at the loss. So it poses serious challenge to the stability of the financial system of the country. Not only in India, any country, the cryptocurrency's existence was a serious challenge. So every country wants to have control that cryptocurrencies. Now it's the RBI's responsibility. RBI has to provide its citizens with a risk-free CBDC because they thought that this CBDC digital rupee should be a risk-free one, and it ought to provide same experience dealing in currency in digital form without any risk associated with the cryptocurrency. Because they felt that there's a risk when you deal with the private cryptocurrencies, but it is not there in the digital rupee. Provide the public with the benefits of virtual currencies. So it's a virtual, it is available. You can use it. It is there in your wallet. You can use it. And ensure that consumer protection by avoiding damaging social and economic consequences of private virtual currencies. They ensure that this should not be there as existed in the cryptocurrency. So they want to assure that there should not be any damage to the public by way of, if they invest in digital rupee, they should not be at the loss. So what's the design changes? Now we are going for the design changes. Design changes, that is, it's in electronic form of a sovereign currency. Sovereign currency means a legal currency. A legal tender should contain all the features of the physical currency. So this is the basic thing that RBI said. It's in the electronic form. It has got all the features of the physical currency. That is, you can easily transfer, you can own it, you can use it for any settlement and everything. And it's that CBDC design is an independent on the functions as it is expected to form. Independent of its function. So if it is 500 rupees, fine. And you can use it for any settlement, yes, you can use it. So it's the purpose for which it is formed that is being utilized. And the CBDC design determines its implication for payment system in monetary policy system and stability in finance. So it should not affect the monetary policy of the Reserve Bank of India. And there should be a stability in the financial system if you adopt this digital rupee. And the main feature is it should be least disruptive because there should not be any disturbance in the money circulation. So this is the main feature of CBDC design. And the key designs, that is the main design. They are saying that key designs are the choice. There are some five methods are there. That is types of CBDC, that is wholesale CBDC and retail CBDC. Wholesale means between the intermediaries you can transact, and retail means between intermediaries and public you can make the transaction. Models of or issuance of cash management of CBDC is direct, indirect or hybrid model, and form of CBDC, that is token based on account. We'll discuss everything in detail. And instrument design is remunerated, unremunerated, non-remunerated, and degree of anonymity. Let us go and we'll have small discussion about each and everything. Let us talk about CBDC wholesale. Here it said it's a wholesale. What are the features? It is designed for restricted use to select financial system, and it is intended for settlement of interbank transfers. It is not directly related to the public. and related to wholesale transactions. 1 crore, 1 crore. Only the intermediaries or interbank transfers, they are using it, and has the potential to transfer the settlement system for financial transaction, make them more efficient and secure. This is with reference to CBDC wholesale and CBDC retail, available to use for all the sectors, that is private sector, non-financial consumers and businesses. So anybody can use it, this CBDC, if it is there and applicable to the public. This is what now the RBI has introduced in digital rupee retail. This is a thing now the RBI has recently launched with effect from 1/12/22. It is an electronic version of cash primarily meant for retail transactions. It is almost equivalent to cash transaction. You can use it. Provide access to safe money for payment and settlement, as it is a direct liability of the central bank, because it's everything is being settled and it's a direct responsibility of the Reserve Bank of India. It's a safe money. You can use it. And now mode of issuance and management. And there are two methods. One is direct model. This is called as single tier model, and indirect model. This is called as two-tier model. Direct model and indirect model, we are going to see. What's a direct model? It is called as single tier model. Here, RBI is responsible for managing all the aspects of CBDC system, that is issuance, account keeping, and transaction verification. Suppose in wholesale, everything is being controlled by RBI. So it is issuance, account keeping, and everything. Issuance of verification, transaction verification should be the responsibility of the RBI. And indirect model, two-tier model. RBI issues CBDC to consumers through intermediaries. So just like authorized dealers, RBI cannot, now they say that they cannot go and directly reach the public. So they issue the CBDC, they reach the consumers through intermediaries. And the claim from consumers has to be managed by intermediaries, as RBI manages wholesale payment system to intermediaries. Suppose if a consumer makes any complaint, and they have to make the complaint only to the intermediaries, and the RBI manages everything through the intermediaries. It is similar to the current currency management system, wherein banks manage activities like distribution of notes to public, account keeping, adherence of requirement related to KYC and AML, and countering the terrorism of financing, checks, transaction verification. It's almost indirect model, that is two-tier model, is nothing but it is equal to physical currency management. And now what are the forms? That is, they are saying that there are two things. One is token based and account based. Now we are going to discuss about the token based. It's a bearer instrument, that is just like banknotes. Whoever holds the instrument, they are the owner. They are the owner. So it's a token based. The person who is receiving the token have to verify the ownership is genuine. Suppose if I am having the token, then I have to assume that, I have to think that ownership is a genuine one. I should not hold the ownership of the others. So token based CBDC is preferred mode for retail. CBDC retail. So which our which our RBI has recently introduced on 1/12/22. Token based CBDC. And account based. What's the account based? Maintenance of records of balances and transaction of all account holders of CBDC and indicate the ownership of the monetary band. So account based means in each and every account you can see that who is the owner. So this is account based. There are two types. One is token based system and second one is account based. And the intermediary verifies the identity of the holder. See, in the first system, token based, the owner who is holding the banknotes, he should know that it's a genuine one and I am the owner. That is the person who holds the notes are owner. Here, in the account-based system, the intermediary has to verify the genuineness or identity of the account holder. Now we are moving to technology choice. That is, it is digital in nature. Technological consideration will always remain at its course, because now this is everything related to technology change. And infrastructure of CBDC has got two technology. One is conventionally centralized control database. Second one is distributed ledger technology. And two technologies differ in terms of efficiency, degree of protection from a single. So for each and every one, the usage is different. In some cases, one has failed, one has achieved. So it differs from the usage between the persons and person. preference is given to the technologies which have strong cybersecurity, technical stability, resilience, and sound technical governance standards. These technologies are flexible to incorporate the changing needs. And now, instrument design. CBDC has got the stored value, payment of interest is an attractive one. Now in India, digital rupee retail has got no interest value, but in some countries, they are giving some interest. So CBDC has got the stored value. So for that balance, in few cases, in few governments, they are giving interest. So CBDC moves away from the cash like to treat it as deposit like. So normally we are having cash, so 500,000 and everything. If you go and make the money in the digital wallet, it is almost equivalent to digital like deposit like. And CBDC will make the banks to lose deposit. This is one of the negative point which every country felt, because if you are holding cash, you will not be given any interest. Suppose if you are holding the money, money in the digital rupee concept, then you have to pay. But this concept is not there in India, because no interest is being paid for the digital rupee. But in few countries, they are giving interest. So this will make the bank to lose the deposit, because this is a direct competitor. Digital rupee concept is a direct competitor to the banks. And physical cash does not carry any interest, whereas CBDC has got interest benefit there. But this concept is payment of interest is there only in few countries. Logical, RBI prefer to issue non-interest bearing CBDC in order to save the bank deposit, because they already worked out the concept of digital rupee. It should not affect the present system, not affect the present financial system. So they issued the CBDC without interest. So if you want, you can use a digital rupee concept, but slowly they definitely move everyone to come for the digital rupee. Now, degree of anonymity, that is the situation where a person's no anonymity, that means you are not known. Here, CBDC plays a role of medium of exchange. It's a medium of exchange for buying the goods. You can use it. Incorporates all the features of physical currency, including anonymity, universality, and finality. And the transaction lead to challenge, which would lead to some trial. It's only a trial. And degree of anonymity would be the key design of any CBDC. And for small value of transaction, just like anonymity associated with the physical cash may be desirable option with reference to CBDC, that is digital rupee retail. And in general, we are going to see all the 5 techniques we have seen. Now we are going to see the general of CBDC. That is CBDC. The approach should have to safeguard to address the potential difficulties and risks in order to build a system which is inclusive, competitive, responsive to innovation and technological changes. And across the world, it is recognized. So it is mostly in conceptual, developmental, and at pilot stages now. Now, in the absence of precedent, because there is so far no one has introduced the concept of CBDC in CBDC concept in India. So there is no. So this will definitely lead to some complication, lead to some problems. So they used to have discussion with the stakeholders. They should have consultation with the stakeholders because of this technological design. And soon the RBI will get the solution to meet the requirement of all the stakeholders. This is the concept. They already said it's only a trial. It's only a pilot project. We are just introducing the scheme of digital rupee. Slowly we will, if there is any problem, slowly we will set right everything. So it is aimed to as a complement rather than replace the existing currency form. So the RBI intention is very clear. It is not going to replace the existing current form of currency, current form of money. It is only a complement. It's only an additional digital rupee, additional currency. That's all. But which has got the equal value to the existing current forms of the money. It's an additional payment avenue to the user. With this existing, along with the existing, it's an additional payment avenue to the users. And one has to remember that this CBDC concept, that is digital rupee concept, is not going to replace the existing payment system. It's being supported by state-of-the-art of payment system in the India that are affordable, accessible, convenient, efficient, safe, secure. The digital rupee will further bolster the India's digital economy, make the monetary and payment system more efficient, and contribute to furthering financial inclusion. So this is a very, very important thing that one has to see. One has to remember that it's only a pilot project that's coming to effect from 1/12/22. Only 4 banks have been chosen for this, and only at the 4 places. Soon, the government will definitely launch at the other. Also, it is only a additional currency. It is not going to replace the existing currency. It is not a cryptocurrency. It has the value of the digital rupee will not change. It will not fluctuate. You can use it for anything. This is the basic concept of digital rupee. With this, I'm going to say goodbye and thanks for watching this program patiently. And any doubt, you are welcome. Any suggestions also, you are welcome. Thank you very much once again for watching this program. And I request everyone to go through the basic concept, that is concept note issued by the Reserve Bank of India on central bank digital currency in the month of October 2022 is being issued by FinTech Department of Reserve Bank of India. Based on that only, I have prepared the presentation, and I request everyone to go through this. And for any clarification, any doubt, you please go through that concept note issued by the Reserve Bank of India on central bank digital currency. Thank you very much. Nandri, Vanakkam.